Hello and welcome to the Business Standard Morning Show. I'm Binu Sandhu. It's the 25th of August 2023 and here are the questions we will be answering today. What's behind India's chess revolution? Can government measures wipe onion price tears? Will inflation concerns take a bite out of FMCG stocks? And what is the Cauvery water dispute? 18-year-old Chennai lad R. Pragnananda gave tough competition to five-time chess world champion Magnus Carlsen before losing the world championship on Thursday evening. But even in his defeat, the runner-up of the 2023 Fight World Cup announced India's rise as a chess powerhouse on the global stage. India now has 81 chess grandmasters. So what is behind India's chess revolution? Abhijit Kumar brings you the answer.
R. Pragnananda, who has taken the chess world by storm with his steep rise, posed a formidable challenge to the 32-year-old reigning world number one, Magnus Carlsen, at the 2023 FIDE World Cup. Before reaching the final, the child prodigy defeated worlds number 2 and 3 Fabiano Caruana and Hikaru Nakamura. Such has been the rise of Indian chess on the global stage. In a recent interview in June, Magnus Carlsen, a true master of the chessboard, said, "I think we are just at the beginning of a revolution that started with Viswanathan Anand becoming a grandmaster, and I think it will only get better from here as India is producing grandmasters more frequently than before. There is a lot to look forward to." Looking at the number of grandmasters from India in the past decade, the statement of Carlsen rings true. With the emergence of 51 grandmasters in the past decade and a total of 81 overall, India indeed is witnessing a revolution in this sport. The phenomena that started with Viswanathan Anand becoming the first grandmaster in 1988 has continued. In fact, it picked up pace with the likes of G. Gukesh, R. Pragnananda, and more. So, what are the factors driving the chess revolution in the country?
It has very positive brand associations. Parents associate it with good qualities like being able to think logically and being able to handle applied mathematics, etc. So they're comfortable with their children getting involved. Second, it's very easy for somebody to get online and play chess. The fact that you have easy electronic access to the tools to improve your game. You can pick up million game databases. You can watch serious games being played live and analyze them while you're playing. Of course, the fact that you have a lot of strong players now means that you automatically breed more strong players. If you're a talented youngster and you're playing with other talented youngsters, you get stronger.
We have oil companies like Indian Oil, ONGC, BPCL, who give employment to the top players.
While India has embraced chess and grandmasters coming from various states, Tamil Nadu stands out for producing the most number of grandmaster titles from India. Since 2014, the state has produced 18 grandmasters and tops the list of states with the most grandmasters. Maharashtra comes second with 10 grandmasters during the period. The Tamil Nadu government allocated 92 crore rupees for the 44th Chess Olympiad tournament held in Chennai last year. It was a global event that saw participation of nearly 1,000 players from over 200 countries. So what sets Tamil Nadu apart from other regions in nurturing chess prodigies?
There's a massive chess culture in Tamil Nadu right from 1970s, 80s. Manuel Aron was the first international master of India. He was from Chennai. Vishy Anand, 5-time world champion, has been there from there. And there it's the right chess culture that the city has managed to build.
Considering the remarkable performance of chess players in India and the untapped potential that spans across the country, what steps can be taken to ensure increased participation in playing the 64 square board game?
What would be useful right now is strong private sector sponsorship, more tournaments, more sponsorship for programs where strong Indian junior players can play abroad.
As we witness young talents achieve international acclaim, it is evident that India's chess revolution is not just a passing trend but a sustained movement that will continue to bring home the highest and most coveted titles in the game.
A little help from the government may also go a long way in supporting the game. Moving on, the government recently imposed a 40% tax on the export of onions to protect consumers from price shocks. But this move has put farmers who were already struggling in a tight spot. Farmers across Maharashtra were seen protesting against the tax, and the government has decided to procure onions at a price matching what the exports receive. Now, will these measures be enough to solve the problems for both the farmers and the consumers? Kasturi Akhil and Tariq Ahmed tried to find the answers in this report.
As households continue to grapple with soaring tomato prices, another kitchen staple has come to weigh on consumers' pockets, that are onions. Retail inflation in onions rose to 11.7% in July, sharply up from 1.7% in June due to heavy rainfall that damaged the onion stock with farmers. And in India, onion is a politically significant crop, and hikes in its prices were instrumental in influencing several election results in the past. In 1998, the then Delhi Chief Minister Sushma Swaraj is said to have lost the elections after the opposition led a campaign over skyrocketing onion prices. So now, to contain the price shocks in the domestic market, the government stepped in and levied a 40% export duty on the vegetable. However, this did not go well with farmers in the leading onion-yielding state of Maharashtra. Earlier this week, farmers and traders in Nasik staged widespread protest by suspending onion auctions in all the agricultural produce market committees in the city. Traders, however, resumed auctions on Thursday for the benefit of the farmers. Agitated farmers feared the export duty would hurt their overall revenue, especially when their sales are already expected to decline in September on the back of a sharp jump in prices during the lean period. Lean period here is the time period when the supply of onion from Rabi harvests ends, but the supply from Kharif hasn't hit the market yet. A research report by CRISIL noted that high temperatures in February, followed by unseasonal rainfall in March, affected the quality of Rabi onions and also reduced their shelf life by 1 to 2 months, that induced panic selling by farmers, propelled by storage concerns. This is expected to exhaust the Rabi onion stock in early September, contrary to September end, as is usually the case. Typically, Kharif onions hit the market in early October, causing the lean period to expand and a subsequent hike in onion prices.
At some time, you have to enable the farmer to earn some return, right? You have to enable him to get some money from his crop. So every time there is a slight increase in prices, if you clamp down on him with import duties, or export taxes or export bans or stock holding limit, then in no crop and in no period of time in a year, he will earn any money. Agreed, much of this price which the consumer pays is taken over by the traders or the middlemen. But if the price increases by 10 rupees, say 6 rupees is taken over by the middleman, at least 4 rupees goes to the farmer. So this is a very precarious situation, because When prices plummet, then there is a problem. When prices rise, then there is a problem.
To allay the farmers' worry, the government on Tuesday decided to ramp up its buffer stock to 5 lakh tons from 3 lakh tons by procuring the onions at export rate. But is this move enough to compensate the farmers?
The sentiment in the market is very, very positive that government is doing something, export is banned. And any in India, or for that matter, any market, the free economies, when you know that the products are allowed to be exported, the prices rise up, so the price will absolutely get stabilized. And I think it is not only ban on export, but is combined by the increased procurement.
The CRISIL report also projects that the anticipated demand-supply imbalance in early September will increase the onion prices in the retail market up to 70 rupees. And if that happens, the government will again be in a fix.
If you are not allowing him to have the export, why are you buying at the price which is similar to export? Now, if you have to give him that benefit of high prices, why don't you open up the exports? If you would not have levied the duty, he would have got a price which in any case which you are buying. So it is a very complex and a very confused policy making. So on Saturday you impose an export tax, on Sunday onward they go on for a strike, on Monday you say that you will buy onions, and on Tuesday you buy at a price which is higher than the price which they were earlier getting, and by Wednesday the strike ends. So it's a very confused policy making.
So how serious is onion supply shortage?
There is a momentarily supply shortage because the Kharif harvest got delayed due to late sowing, or maybe some crop got damaged. You still have stocks. Your new crops are about to come in a couple of weeks' time. So in this temporary period, you could have done, the prices would have had moved up, because this is usually the time when the crop prices move up. So the shortage is not very grave. The shortage is not very big. The shortage is very maybe 5-7% immediate shortage, which I think in the next couple of weeks, when the new crops start arriving, the shortage will go away.
Governments try to strike a balance between the interest of farmers and consumers. The key lies in smoothing out the recurrent price volatility that can be tackled through improved storage and processing infrastructure for commodities.
Renewed inflationary concerns and El Nino-linked weather conditions have once again put consumer stocks in the spotlight. In the past 1 month, the Nifty FMCG index has declined 3% as against a 1% fall in the Nifty 50 benchmark. Going ahead, will rising inflation further distress the FMCG players, and what should your trading strategy be? Lovisha Darad explores in this report.
Shares of fast-moving consumer goods companies have been reeling under pressure for the last 1 month amid elevated inflation and rising input costs. Over the last 1 month, stocks of Hindustan Unilever, ITC, Britannia Industries, Godrej Consumer and Nestle India have declined up to 11% as against 2% fall in the Sensex benchmark. In July, India's headline consumer price inflation surged to a 15-month high of 7.4%, driven by a 37% surge in vegetable prices on an annual basis, 13.3% rise in pulses, and 13.04% in cereals. Prices of crude oil and palm oil too saw up to 20% jump from June lows. Going ahead, analysts see no relief for the consumer sector in the near term as prolonged inflation could dent demand recovery.
We do not see much impact of transitory food inflation, but cereal inflation can have a bearing on food companies such as biscuits and noodle, etc. Since FMCG items are small ticket size purchases, the impact on demand is likely to be limited in the current macroeconomic condition. But there could be some margin impact on the food players such as Britannia and Nestle.
Those at Prabhudas Leeladhar too remain underweight on the sector as they see inflation in staples to remain upward in the near term. Additionally, analysts opine that the prevalence of El Nino-like weather conditions can slow the pace of rural recovery in the coming months.
While volume growth continues to recover for the 2 consecutive quarters, but still remain in a low to mid-single digit. Secondly, the rural growth though has seen a recovery trend, but certain rural pockets continues to remain under pressure. especially in the north and the UP markets. Fairly dry monsoon in most days of the August, which might delay further recovery in the rural.
Against this backdrop, what trading strategy should investors adopt going ahead?
Rising inflationary concerns, especially in the food segment. However, earnings outlook over the next 2 years are healthy, with expectations of improving rural demand and margin tailwinds due to the fall in prices of palm oil and crude linked derivatives. Hence, we remain bullish on this sector and optimistic on the near to medium term outlook. Our preferred picks in this space are HUL, Godrej Consumer, Imami, and Zydus Wellness.
Overall, analysts see higher inflation, El Nino concerns, and rising commodity costs as potential headwinds for the consumer sector in the near term. Markets on August 25th will closely track Fed Chairman Jerome Powell's speech at Jackson Hole.
He's making plans for an early retirement. Business Standard.
Uneven rains may indeed spell more trouble for FMCG firms. Meanwhile, trouble is brewing in South India again over the sharing of Cauvery river waters. The Supreme Court has assured Tamil Nadu that it would constitute a bench to hear the state's plea for the release of its share of the waters. Now, what is this dispute all about? Let's find out.
On Monday, the Supreme Court of India agreed to constitute a bench to hear the Cauvery River water sharing dispute between Tamil Nadu and Karnataka. This comes after Tamil Nadu petitioned the apex court to direct Karnataka to release 24,000 cubic feet per second or cusecs of Cauvery water daily to support standing crops. Cauvery is one of the major rivers flowing through Karnataka and Tamil Nadu. It is also known as Pon, which means the Golden Mother. Cauvery rises at Talakaveri in the Brahmagiri range of Western Ghats in Karnataka and flows into the Bay of Bengal. However, most of the river's total watershed falls in Tamil Nadu. The long-standing dispute between Tamil Nadu and Karnataka over the sharing of Cauvery waters resurfaces whenever there is a deficit in southwest monsoon in the region. The cropping patterns in both states, along with handling of this complex issue in an ad hoc manner, have only worsened the situation. Between June 1st and August 17, Karnataka registered 499.4 mm of rainfall against the normal of 587.9 mm, a deficit of 15%. The rainfall deficit continued into August. Though neighbouring Tamil Nadu received normal rainfall during this period, farmers there rely on Cauvery's water for irrigation. However, Karnataka's farmer protested against the release of water due to the ongoing deficit in southwest monsoon. On Monday, the opposition BJP organized Mandya Bandh to protest against the ruling Congress government's decision to release Cauvery water to Tamil Nadu. BJP leaders and former Karnataka Chief Ministers H.D. Kumaraswamy and Basavaraj Bommai criticized the state government and accused it of betraying people for the sake of politics. The opposition alleged that the Congress government is releasing water to help Dravida Munitra Kazhagam or DMK, an ally in the newly formed opposition bloc India, which stands for Indian National Developmental Inclusive Alliance, ahead of the Lok Sabha elections. In the interim, the Supreme Court has ordered Karnataka to release 10,000 cusecs of water to Tamil Nadu for 15 days. However, Karnataka's Deputy Chief Minister D.K. Shivakumar appealed to reconsider the decision due to scarcity issues faced by the Cauvery Basin area throughout the monsoon this year. As of August 21st, the projected rainfall across the country during the second half of the southwest monsoon season, that is from August to September, is projected to be normal, ranging between 94 to 106% of long period average. However, the Indian Meteorological Department has forecasted that there is a high likelihood of below normal rainfall over most parts of peninsular India and western parts of northwest and central India. With this, all eyes are now on the upcoming northeast monsoon season.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Tamil Nadu, meanwhile, has claimed that there was a serious threat to crops in the Cauvery Delta region as Karnataka has not released its share of water. The apex court will hear the matter today. Well, that's all for today. For more news and analysis, please log into our website business-standard.com. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.